This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, we're coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, as always, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning. Don't remind us on a Tuesday that it's a Tuesday morning. You're only allowed to say that on Thursdays and on Fridays, right? That it's a Thursday morning or a Friday morning. Otherwise, then just don't mention it. But I mean, looks like it's not too bad. The cues from across the globe, at least, are not bad today.
It's not bad, actually. I mean, we got a bit of a risk on overnight as well, and that's basically what we want to start with. By the way, yesterday we got a good follow-through, and I think that has to be said. We were kind of talking about this on Friday. We were talking about this actually before that as well. Finally, we got a decent kind of a move. The Nifty ended about 0.4%. Not quite the day's high, but not very far away either. By the way, the high yesterday was 19,621, which is almost at the 20-day moving average. That's the first marker that we've been putting out that the market needs to climb get its head above and close. Well, global risk sentiment, as I said, is a bit better. The S&P is up 0.9, the Dow is up 1, the Nasdaq is up about 0.5% as well. Dollar index, no incremental fresh move higher, flattish, 102.07. Oil prices, well, they came off a little bit, but they're just holding just under the $86 per barrel mark. This is Brent oil prices. So incrementally, there is nothing. News flow-wise as well overnight, there was nothing new. But, looking ahead, there is going to be a fair bit of news flow, and most of this is around, data and what central banks may do. So we've got the RBI decision, which we will get on Thursday morning here. And then same evening, Thursday evening, US time, we'll get US CPI numbers. So I think those two are the big ones for markets, both here in US. And of course, what happens to the US market, because there's been so much back and forth about whether, we'll see a soft landing and whether they can actually get inflation down to 2% without causing some kind of a recessionary environment. I think this number, the CPI number, perhaps becomes globally important for markets. All right, coming back here, I think it's pretty simple, not very complicated in terms of what the market needs to do. It needs to close above the 20-day moving average. We almost got to it. It's moved up. The average has also moved up a little bit. It stands at 19,639. We left off almost at 19,600. So, 40 points more. You get a healthy, decent close above it. And I think confidence starts to come back a little bit more. The 61.8% retracement of the recent fall, the 350-odd point fall that we saw, it stands at 19,726. So you get a close above that 20-day. The next target, the next level, which you need to cross, is 19,726. On the downside, I think last Thursday's low is the one that really would matter in case some selling starts to come in. But that is some distance away. That stands at about 19,300. On the Bank Nifty, it was a bit of a lethargic kind of session. It didn't do anything at all. Absolutely flat. Did not participate in the up move. For the Nifty Bank also, the 20-day stands at 45,356, and that's the level which the Bank Nifty needs to cross and close above for enthusiasm to start to come back. Mid caps and small caps closed higher, 0.25%, 0.5%. So broader market action still remains quite okay. Although I have to point out, lots of earnings have disappointed, and stocks are reacting. Large stocks, liquid stocks, well-owned stocks, between 5, 6, 7%. And we saw lots of that kind of action yesterday. So a lot of pullback going on as well on heavy volume. So keep an eye out on that. Otherwise, the GIFT Nifty is indicating a flattish kind of start, 20 points lower. Sonia.
Okay, well, we are virtually now once again getting to this all-time high territory, right? Just 300-400 points away from that 20,000 mark. So let's see whether we can get there. The bulls tried to make a bit of a comeback overnight. So the US futures are a little unchanged. But if you look at what happened overnight in the Dow, 400 points higher. The S&P 500 ended the 4-day losing streak. So the bulls are sort of making a comeback globally. The Nifty, as I said, has been holding on to the 19,600 mark. And there was large buying from DIIs yesterday, while FIs continue to sell for the 10th straight session. FIs have now sold over 10,000 crores in August so far. So see, the bias is definitely on the upside now that global cues are also back. In terms of earnings, what came through post-market hours yesterday, I'm looking at some of the good ones. You had Godrej Consumers, which reported a volume growth of almost 10%, so the street would like that. Max Health, Torrent Pharma reported a good set of numbers as well. PB Fintech reported an operational profit versus a loss last year, and a lot of these platform companies are in focus, so keep an eye out on that. And yesterday, we saw the pharma and IT stocks rally. In fact, Divi's Labs is now amongst the top Nifty gainer this year, so do keep an eye out on that. And in terms of earnings today, you have Hindalco Coal India that will be reporting their numbers. So lots of stock-specific action. But I reckon this market is slowly and steadily getting back to those all-time highs. It's just a matter of time. Until then, little bit of a range-bound movement.
Well, that's right, Sonia. And the Nifty Bank needs to perform because as the markets are only around 2%, the Nifty is only 2% away from its all-time highs, but the Nifty Bank is 3.5% away from its all-time highs, telling you that we have a bit of an underperformance that's coming from the Nifty Bank. So the Nifty Bank needs to fire. If that happens, we're headed towards the 20,000 mark yet again. Now, in yesterday's trading session, the FI as well, they lightened positions, both on the long as well as on the short side, though they continue to remain short with close to 55% of their positions on the short side. Just a few sessions ago, we were highlighting that the FI net short positions in contracts, well, they were at around 41,000 odd. Now, in the last few days, because of lightening of positions on the short side, well, we're seeing that number come down to around 19,000. When we're talking about net short positions, it's the FI short positions, and from that, you deduct the long positioning. So that's come down a little bit. So some part of those shorts have covered out. Now, today is the Nifty Financial Services Index expiry. So the second half of trade belongs to the Nifty Financial Services. It's holding a little above the 20,000 odd mark. The 20,000 put has the highest open interest on the put side. And yesterday, that was fairly active. Close to around 40 lakh shares were added out there. The premium's around 44 rupees odd. So just going by that data point, highest open interest added around the 20,000 put, premium of around 40 to around 50 rupees. You get your crucial support zone of around 19,950. That's on the Nifty Financial Services Index. That's the number you need to watch on the downside. Moving to the Nifty options data, well, there was some put writing, 19,500, 19,550 between them. They added close to around 80 lakh shares odd. So to get to the levels then, the 20 DMA needs to be conquered on a closing basis. And that number comes up for you on the screen. However, since we saw 19,500 puts see a good amount of open interest built up, on the downside, 19,460 odd becomes an important support zone. But the Nifty Bank, that holds the key. It has to give up this underperformance that we are seeing, and you want the Nifty Bank to head towards its 20 DMA. If that happens, then we're well and truly on for the 20,000 odd mark. In the near term, though, Nifty needs to cross that 20 DMA on a closing basis, and the Nifty Bank needs to perform. I don't know whether it's going to come from HDFC Bank or a couple of those Nifty Bank heavyweights, but that needs to fire. For starters, we start off with a cut of close to around 40 points.
Just one word, and of course we'll get that whole view in just a bit, but Motilal Oswal said that the banking earnings this time, they believe that the best of the banking earnings is behind us, and there's moderation in net interest margins now. So they've also sort of churned out of banks, and maybe that's a narrative that the street is also working with.
I think one thing we've seen across bank earnings is NIM compression, right?
Yeah.
I mean, through and through. I mean, without exception, I think, starting with the largest, which is SBI, down the curve.
I think what happened with SBI also, the growth wasn't as much, so NIM compression, and that, soured sentiment a little bit.
Absolutely. Well, we'll discuss this in greater detail as we go on. But before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. Rajat Bhattacharya of Standard Chartered will join in to discuss the sort of global view. Our research team will get you CNBC TV18's list of top 10 stocks for the day. At 8:30, we'll have Amisha Vora of Prabhudas Lilladher to talk to us about what she likes, themes she wants to bet on.
Okay, so let's kickstart the show with that view that we just spoke about. Gautam Dugar of Motilal Oswal. He expects a range-bound market with a positive bias. He says corporate earnings have been in line to slightly better than what he expected. Autos, NBFCs, hotel stocks, real estate, discretionary stocks look good now. And they are advising shifting capital away from banks and into NBFCs. He feels the best quarter for banks is behind us and margins will moderate further from here. He also says that auto numbers have been very strong this quarter, and among specific stocks, they like Zomato. They actually had gone overweight on Zomato a month ago. It's worked out well for them. They like Indian Hotels, Mahindra & Mahindra and Titan.
Okay, let's get you some money market views here. Abhishek Goenka of IFA Global says Fitch downgrade of US sovereign ratings, selling pressure in domestic equities and higher crude prices continue to hurt sentiment. He says one-year forward yield has dropped further to 1.6%, and at such depressed forward levels, there is little interest among exporters to hedge long-term exposures. Nonetheless, he adds, we have been seeing the central bank intervene around 82.8 to the dollar levels. He expects resistance at 82.9 to hold and will continue to see the USD INR pair trade in a range of between 81.6 to 82.9 over the medium term.
Okay, and on the bonds, Ajay Magnolia of JM Financial says continuous upward trend in US yields post-rate hike, ratings downgrade and inflation concerns has kept traders cautious. He said ahead of the RBI policy, market is likely to trade in a narrow range and the RBI MPC is expected to hold rates but might turn hawkish in its inflation commentary. He expects the 10-year benchmark bond yield to trade in a range of 7.17 to 7.23% for the day.
Well, we've got a lot of stocks that we're going to be tracking for you since it's almost the end of earnings season. So let's get the list up for you on the screen that we'll be covering in our special Top 10 segment. We're looking at Godrej Consumer, Tata Chemicals, Max Healthcare, Torrent Pharma, PB Fintech, Gland Pharma, MedPlus Health, Indigo Paints, HDFC Bank, and Manappuram Finance. Well, all of them expected to open up in the green and react to positive news flow.
Okay, well, it's all green as far as stock reactions are concerned.